What's your sense, Vikas, about whether this is one more of the corrections that have happened in the past? At some point of time, it'll get bought into, yes. But is it possible to pencil in or put a finger on the pulse as to when can it happen? Or is it too fluid a situation right now?
Hi, Neeraj. I think, very frankly speaking, right now, the way I see is that things are slightly open-ended from a point of view of the inflationary environment has far exceeded I think probably most pessimist market player. I think especially in US, I'm talking about, and it is led by, of course, Ukraine war, China, and many other issues, tariff hikes and stuff like that. So I think, and this it looks like that it is unlikely to settle in a hurry, and Fed is probably, I mean, we all know that they're behind, but you might see some sort of knee-jerk reaction. That is what right now markets are expecting. Now, we know that how macros are, they change in no time. 4 months ago, 5 months ago, I don't think anybody expected Ukraine war and things to kind of get compounded so badly. So things are where they are. So I think, in my opinion, given the way where macro plays out, especially from a US economy perspective, things are looking fluid. But I do believe that India is not as worryful situation as US is. US is sitting on all-time high balance sheet. US is sitting on an all-time high inflation. US is sitting on some of the structural problems of the growth, while India is actually in the middle of a structural growth pool. Our inflations are not as bad as in US. US normal inflation is 0% and back at 8%. In India, our normal inflation is 4 to 5%, and we are at 7%. And once the energy price settles down, which I do believe, whether it is a matter of 3 months, 6 months, or whatever, once the Ukraine crisis settles down, energy price would settle down. There's no sort of doubt in my mind. Now, the meanwhile, what kind of damage gets done is a question to be sort of looked after. So I think, relative basis, India is better placed. We are unlikely dependent on foreign capital as much as we have been in the past. In the last cycle, when the Fed was raising interest rates, we became part of fragile five because our current account deficit went to 4% of the GDP, as well as our portfolio flows were going down. This time around, if you say, despite such a massive exodus of the portfolio flows, we are still holding pretty well. Our inflation, current account deficit is holding well, despite such a high energy prices. So I think we are on relative basis much better place than we've been in the past. But when markets kind of go through this kind of phase, global meltdown, we cannot remain unimpacted. And that is where I feel that from India's standpoint of view, next 3 to 6 months, amid this uncertainty, would be the best time to buy.
Um, are you already sensing opportunities there, or for now? Because I mean, the reason. Okay, let me rephrase my question. If the US sneezes, the world catches cold. It happens all the time. So even if India might be better placed, because if the US markets continue that tailspin, would you reckon the collateral damage has the potential to take the markets even lower than where they are right now, even if the other macros of India might be relatively better, though crude at 120 is probably the biggest bugbear?
It is possible. It can't be ruled out. As you rightly said, that it depends on the extent of panic and depends on what kind of development takes place. In markets, never say never, and it is possible that it can trade lower than these levels. Though I think markets have found multiple support around these levels of 15,700, 800 levels. But in markets, with short term, anything is possible, and I think it's quite possible that markets might give in another 5-7% if US were to kind of get into a meltdown kind of situation. Only, like I said, the silver lining is that things will come back. Our problems are not structural, our problems are good. So in that sense, that's the reason I said next 3 months, because I don't think this is going to get over in a hurry. It is going to pan out over the next 3-6 months in different ways. And as that happens, I think you will see volatility to continue in the markets. If tomorrow good news comes, let's say Ukraine war stops and energy prices start correcting to $70-$80, I think we are back in the game. And one thing I have seen, when events develop, they develop overnight without anybody expecting. Both sides, either positive and either negative. Right now, I think there is a huge amount of pessimism. There's a panic. Definitely, there's no doubt on that. And that panic is creating havoc in the market. Good part is that there's not much leverage position in the market this time around. Generally, leverage positions do cause very sharp cutbacks. And I don't see very high leverage position. When markets are subjected to high leverage position with a very sharp knee-jerk reaction, you see deep cuts, and like what happened in case of pandemic. I don't see this time around. Markets are slowly prepared. there are short positions in the market, and to that extent, I think we are unlikely to see a very sharp, deep cut, like let's say 15% in a day kind of things. In my opinion, like it
Mm.
happened in GFC or in pandemic time. I think that those kind of things, in my opinion, would be a less probability. But like I said, markets, you never say nothing can happen. Markets, everything is possible in a shorter term. That's the construct right now. I am seeing that marked by worry, a lot of sort of uncertainty, and that's likely to continue for a few more months, I guess.